Joining me this Friday and Lunar New Year is Peter Hug. Peter, thanks for being back with us. Hopefully this year will bring luck.
Yeah, cross our fingers.
So, Peter, many are saying how gold has enjoyed such a strong January and how it's one of the top performing commodities thus far. But in my opinion, I'm seeing the numbers, yet I'm not really feeling the enthusiasm around the metal.
I agree with you, Danielle. I mean, I can't imagine people are partying because gold has rebounded from under $1,200, a mere 3%. And I say a mere 3% because when you look at what's going on globally with some of the emerging markets and with some of the carnage in the equity markets, not only here but in Europe, I would have expected gold to have a bit more momentum than just a 3% pop in the new year.
Also, the U.S. market opened with deep losses this Friday. Peter, do you think this is a correction or are you more concerned here?
I'm hoping it's a correction. I hope this isn't a chart that is starting to look similar to the 1929 chart where we had the run and then a retracement back into 33, which was a 70% drop in the equity market. I don't think we're there. I'm not calling for a doomsday drop in the equity market. We've been relatively neutral to standoffish on the equity market since the end of the year, thinking it was well ahead of itself. And so we're assuming here that this is a correction. It could go a little further. It's got some momentum behind it because of the emerging market issues that have developed since the Fed has begun to tighten. And so there may be some more pain ahead, but I don't think we're far away from a buying opportunity in the equity market. But again, it's the jury's still out on this. It's something that needs to be watched.
So, Peter, let's get back to gold here a second and look at some of the factors in place that should be positive for the metal. We have the start of the Lunar New Year. We have India suggesting that it may relax some of its import restrictions on the metal. We have jobs numbers scheduled to come out next week, and we also have deflation concerns continuing in Europe. Could we see the start of some momentum here and some positive signs for gold?
I wanted that 1255 taken out. It was taken out. We got the immediate run up to the next resistance level of 1278, and it just stalled. And coming back down through 1255 overnight or yesterday morning was no issue for gold. So I'm not seeing the conviction on gold. For me to be more convicted on gold, unfortunately, is going to require a lot more damage on the equity markets and subsequent issues with the emerging economies that could affect Europe, and the Fed then beginning to realize that maybe tightening should be somewhat more delayed going forward. That I think would give me enough impetus to get aggressively long the gold market. But if this is only a correction and the emerging markets I'm not going to say heal themselves, but at least stabilize, and money flows back into the equity markets and by that also into the US dollar, I'm having trouble getting behind the gold run here.
Peter, we also saw inflation data coming out of the eurozone today suggesting there are still deflation fears lingering. Would this suggest further easing by the ECB? We have a meeting from them coming up next week.
Yeah, I think Draghi has made it very clear that he's concerned about deflation. And again, within that context, if you buy into the argument that this is simply a correction in the U.S. equity market and the U.S. economy is not robust, but is certainly growing, which seems to be confirmed from the Fed. I mean, why would the Fed, increase or decrease the tapering by another $10 billion unless it had some kind of comfort level that the economy at least could handle it? And if that's the case, and Europe is still fighting deflation, you have to make the assumption that money is going to flow. Capital flows are going to continue into the US dollar, which I think, at least in the short term, is going to be negative or is going to be a serious headwind for the metals.
Finally, Peter, let's talk about the platinum gold spread, which you said was way ahead of itself. Others had taken a different stance, but you were right on. Comments?
Yeah, I mean, I'm in the camp that I do believe the U.S. economy will somewhere down the road start to gather some legs. And based on that, I am very constructive the PGMs going forward. But the recent run on platinum to gold, where platinum was trading at 220 ounces, at a $220 differential to the price of gold, in my opinion, was exaggerated. And I was looking for a retracement back to about $140 premium, which we got yesterday. And we exited the trade yesterday at 140. And again, based on the premise of the equity markets having a small rebound yesterday. But again, I put the caveat in that we might see this even narrow more to 120 if the emerging market issues continue to be on the forefront, which they again came out overnight. And this morning we see the platinum gold ratio closer to 125.
Finally, Peter, let's end it with a trading range you're looking at for gold.
I'm thinking 1238 to 1255, very short-term range. I want to see how this market closes today. If we get a massive sell-off at the close today and we have the Dow well down, by well down I mean well under 300 points down, I think there is going to be some serious issues overseas when Asia opens on Sunday night and then again through Europe. If the Dow can at least regain some of its losses from the opening this morning of 200 down and close, under 75 points down or even flat, I would tend to think the 1238 level would be more in my sights than 1255 for Monday morning.
Perfect. On that note, happy Super Bowl weekend, Peter.
Yeah, go Denver. Bye.
Go Denver indeed, Peter. Don't forget about our bet. Thank you for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com or follow me on Twitter @Daniela Camboni. Thanks for watching.